Marco here from Fair Realty. We have another guest on the podcast today, Mike Grace, good friend and mortgage broker. I'm going to do a short monologue before I let Mike take over, just reflecting from the previous podcast. We had Rulon, a couple of things from that. Rulon had mentioned how me and him met and how sometimes being interested in finances, financially savvy, whatever you call it, can lead to relationships and friendships. And that's how I actually met Mike as well. Sometimes I have a bad memory, sometimes I have a really good memory. Mike, you phoned me while I was driving down Shelburne past McRae's. I don't know if you know where McRae's restaurant is on
Yeah,
Shelburne. And you
yeah.
phoned about potentially putting your house up in Fairfield at the time as a mere posting. And you kind of seemed hesitant about it. You seemed, I thought you maybe thought there was some sort of catch to putting a house on the market with a mere posting. And I was thinking, man, this guy's going to be like a difficult client to get my $799 out of, because that's what I was charging at the time, right? So that's how we kind of got our first introduction. And yeah, I honestly thought, yeah, you're asking a lot of questions because I think you had known a bit about real estate. Maybe you had already bought and sold a house prior to that, so you kind of knew how things worked. And then, the second thing I'll add is when I met you at your house, you had a basement suite you were renting, and then you and your wife were living upstairs with a roommate. And for those people that watched the previous podcast, Rulon talked about living in a one bedroom, one bathroom condo with a makeshift den with a roommate for 3 years. So it's interesting how people, that are trying to get a bit ahead in life financially, sometimes there's some similarities that pop up. So let's get started. Mike, maybe you do a bit of an introduction of yourself, and then after you're done that, maybe we'll jump into the first question of how do you get paid as a mortgage broker?
Totally. Yeah, no, it's uh, I appreciate the intro and just going back quickly on how we met. I do also recall that co first conversation, and my recollection at the time was, and your impression that I was probably a difficult client was true. Um, um, I think my recollection at the time was like, is this too good to be true? The mirror posting. I had experience at that time already with a couple of homes under my belt, and doing significant improvements to those homes and putting the work in and sort of grinding away for what felt like a small amount of profit compared to an agent's commission. So um, I think at that stage in my life, I was like, is this actually a possibility or is this like potentially a scam? So, so we answered that question, definitely not a scam, and a good sort of option for those savvier clients or clients willing to ask more questions, the mirror postings. Um, but yeah, as an intro to myself, I've been brokering now in the industry, I'd say 7 years. Previously, recently changed my company name to Sobo Mortgage. And previous to that, it was just Mike Grace Mortgages. Um, yeah, previous to that, I was a firefighter with the District of Saanich, and I did that job for 12 years, and eventually just chose to transition into the real estate industry.
Quick
So
question, why the name change for your mortgage business from Mike Grace Mortgages to Sobo?
yeah, I I have felt through strongly through the length of my working life in this industry that I'm super uncomfortable marketing myself, and talking about myself. Um, and so um, I finally came to this realization this year and decided to do something about it. It's a lot easier for me to talk about my business as a separate entity, of which I'm a part, but to market my business and not to market me as a person. I've always been uncomfortable with sort of talking myself up and a salesy type approach. So
I've
naming.
never ever. That's the first time I've ever heard of that perspective. Usually, people are trying to pump themselves up in terms of their personal. Yeah, that's a really cool
Yeah.
perspective. Yeah.
Yeah, I mean, I would like to market our values and service that we provide, but not necessarily anything to do with me. And if I could be invisible, I would choose to be so.
And what do you think led to the career shift? Because you were coming from a career that's reasonably well paid. It's also highly regarded in society, being a firefighter, to a profession we'll discuss a bit later in the podcast. In the public limelight, maybe not seen as valuable or as honored as being a firefighter.
Totally, yeah. I mean, uh, first off, I think like the job as a firefighter is a great job. It's a great profession. I have lots of friends still working there. Um, I had and I think my circumstance was a mix of professional and personal and why I decided to make that transition. Um, I had for a couple of years been doing both jobs, brokering and firefighting, and um, found myself in a position where I was slightly overwhelmed with the schedules of both. And um, on the personal side of things, um, you know, just having two kids and having a young family, and one of our kids had some health challenges around that time. And so I just decided to kind of simplify that portion of my life. Um, it is possible to burn the candle at both ends too much and hustle too much. And so there was a decision point, and I think it was for the best in the end.
Yeah, no, I think some balance is important. So, okay, enough with the fluffy stuff. How do you get paid? I think the one difference between our two industries, real estate and mortgages, is we as realtors have to provide a disclosure of remuneration to each client. I don't think that's an industry standard in your business. Am I correct on that?
Definitely, yeah, no, definitely not a standard across the origination world. And what I mean by the origination world or the origination market is in any way that a customer can obtain a mortgage, they have to go through some origination channel, whether that's a mortgage broker directly with their bank in the branch talking to staff, or with a mobile mortgage rep from a big bank. So that's kind of your avenues as a customer to obtain a mortgage. As a mortgage broker, we are regulated by BCFSA. We do provide a disclosure of our compensation on each particular deal. That's in the Form 10. It's in the fine print. But essentially, what most customers need to know if they're working with a mortgage broker is that the mortgage broker is taking a commission that's based on the amount of the mortgage. And the simplest way to put that is, your average commission is 1% of the mortgage amount.
And does that depend on the product? Is there a variation with?
Absolutely. Yeah. There's lots of variation, and there's a couple of different compensation models in the industry. Um, the most common compensation model is an upfront uh, comp model where you're paid a certain amount of basis points on the mortgage amount, and you're paid that once in a lump sum once the mortgage funds. But there's also a trailer fee model, and there's not too many lenders that participate in that. Some of your viewers might recognize Merrick's as a lender. They're a monoline here in Canada. And Merrick's offers a trailer comp model where you'll maybe earn, I think it's like 50 bips on the mortgage upfront. And then as long as the customer holds that mortgage and even renews that mortgage, the broker will continue to earn trailer fees on that.
And is there a difference in compensation between the different lenders you work with? And if there is, how would that come to light to you? Is there a spreadsheet you get and says, TD is offering this much, CIBC is offering this much? What does that look like?
Yeah. At any point in time, compensations may change. There are lenders that will push out broker comp specials to try to drive business into their products. So just as an example, it could look something like extra 20 basis points between for mortgages approved between, June 1st and July 31st. Um, and so those are always um, those are always coming out from various lenders, from mostly from the monolines. Um, the There's different compensations for different terms. So generally, a 5-year term will yield, your standard compensation around 1%. If you go shorter than that, you're going to start cutting down on comp. So a 3-year term, there's probably on average about 70 basis points on that mortgage. So a 30% discount in comp to underwrite a 3-year term.
So, how does a consumer know and trust their mortgage broker that that mortgage broker is absolutely providing the best possible advice and not factoring in his or her compensation? Because, what if your gut feel is that the best way to go, let's say in this point in time, is a 3-year mortgage, but you're getting 70 bips, but the 5 year is paying, 100. Do you think there's ever a conflict there, honestly, in your industry with what's being recommended to? Is there a potential that the compensation's influencing advice that a mortgage broker is giving to his or her client?
I definitely the answer is yes. But I think like overall, like there's so much context to a particular deal that um, it's it would be impossible for a customer to know if their broker's intent is positive or not. Um, and just as an example of that sort of large gray area right now, um, for me personally, I would say over the last 18 months, I've been strongly recommending 3-year fixed rate terms. It gets most of our customers through this period of interest rate uncertainty. And some of these products allow customers to renew early without a penalty as well. So that's great. It's a reduced comp for me. I don't particularly care. It's not my focus to focus on comp, but um, in some cases lately, there's been 5-year products where the rate has been so competitive, it's impossible to ignore those. And yes, I'm getting paid more for those deals. But um, if you do like a break-even analysis on those, say a super cheap 5-year at 474 right now for 20% plus down, um, so no insurance premium that would be classed as insurable. That's really hard to ignore. The break-even rate's like well under 4% after 5 years. And there are vehicles to reduce your rate midterm, like doing blend and extends or like early renewals as well. So in that sense, like there is so much gray area there. And I think it's just worth a conversation, I think, for customers to have with their broker and be like, hey, what like why are you recommending this? Or what would you think about a 3-year? Or like where are we at?
Okay, I think that's a nice segue into, you bring up this gray area. How does a consumer choose a mortgage broker? What are you supposed to ask? Like, even to me, it's a bit of a gray area.
Yeah.
I prefer to work with you because I feel like, you're competent and we know each other. But even if I didn't know you and I had to go out and choose a mortgage broker, I don't really know where I would start.
I see the challenge. I think like because we're a dime a dozen as well, there's so many mortgage brokers everywhere, um and there's, you know, literally in Victoria, I think there's always, uh two two steps of separation socially amongst most peer groups and in the city. So you always know somebody who knows somebody. Um, but honestly, like if I were a customer and I had the experience that I have, but I was looking for a mortgage, I would probably interview a few different brokers up front, and including your bank reps or whoever, get a sense of how they communicate um, and if they have a process, and also try to figure out what your priorities are as a customer. Is it like I'm after the lowest possible rate? Like, is that is that your priority? Because if it is, you should make the decision up front to go in a particular path. Um, and is my priority to feel like I'm well supported in the transaction or in looking, then that may lead you in another way. And so each broker has a different business model, and um, the barrier to entry is low into this industry, and there's a large variation in amongst the service levels between all of the origination channels and then within the broker channel itself. So um, I think as long as you get a sense that your broker has a strong sense of process and that they have a system, that's a good starting point. And then number two, if you feel like you can have a conversation with them and ask them those hard questions and you're feeling like they're giving you a straight answer, I think that's probably a really good sign as well.
To touch on your point, if someone's going after purely the lowest rate, what would that look like in real life? Would that be going online and going, I don't know, I see like True North is sometimes advertised on some of these websites. Is that, if someone's really seeking that, it's not, I prefer to have a, some service and a broader plan and picture. So it's not something I would seek, but is that, or would you go in some form where they post, online banks that offer these
Yeah.
rates, and what are your thoughts on you know
I
some of
mean,
those offers that
yeah,
people do? Is it True North? It's like there's one that I
True
always see
North.
popping.
Yeah.
Yeah, yeah,
Yeah, True North.
yeah,
You know what? I fully respect True North as a mortgage origination provider. And just so your viewers know, like True North would land under the umbrella of a mortgage broker.
yeah. Okay.
Um,
Okay, so
and
they're not actually a lender.
well, they do have, True North has their own, they're big enough now, they've been successful enough that they have their own lending product, that's CMHC, uh, that's for CMHC insured mortgages. So um, they're a big operator, and honestly, like they're a leader in the industry in various ways. But um, what a customer needs to know about True North is that they're not going to get um, they're going to get a good rate on a particular type of transaction. So insured or insurable transactions, generally purchase prices under 1 million, where credit is not a problem, and maybe where the client is making less than a 20% down payment or can qualify with a 25-year AM. That's the key rate advantage for True North.
Do you think there is a value added to a mortgage broker being familiar with a particular marketplace? And where I'm getting at with that is, let's say in Victoria, we have issues with buried oil tanks. Certain things pop up that are very specific to the marketplace. Do you think there can be hiccups there with someone using, a provider like True North versus someone that knows how to, or in the city of Victoria too, 90% of suites would not be authorized in terms of they don't have a permit. Do you see that sometimes being a hiccup if someone's dealing with something online? They're buying an older house, there's been a remediated tank, the suite is not permitted, it's in the property disclosure form. Does that come into play at all on the mortgage end of things?
I would say minimally, yeah, there's maybe it's a small component. Um, and where I would say that plays a role is where, a local broker may have relationships with smaller credit unions that say, like a True North, it's impossible for them to maintain that type of relationship just because of their agent structure. Um, so, as an example, I'm one of very few brokers on the island that has a relationship with Coastal Community Credit Union, and they can do things for my clients that no other lender can do, and like things like land only on a Gulf island type thing. So I think that's geographic
And
advantage for sure.
and when you say a relationship in that particular case, like, do you like have contacts to physical people that you know at various lenders as a mortgage broker that you can call and discuss a file with? Like,
Yeah, yeah, absolutely. And
yeah,
especially with the small credit union and I mean, I would say in terms of um I without disclosing too much, my relationship with Coastal's super positive, and it's because I'm an over discloser. I like to disclose the full file and not try to sort of like smudge the edges a little bit. And so they really value that from an underwriting perspective, and that trust is built up. Where they want more out of me is more business, and that's something I'm always working on providing. Um, because as a smaller credit union, sometimes they can be competitive depending on the property and where that property is located. But in the bigger markets, sometimes it's harder to place deals there.
okay. Nice little segue into my next question for you is, a lot of the people I've dealt with at banks, mortgage advisors and whatnot, and I'm not saying people that work at banks are not competent, but the service is definitely lagged. For example, something you provide, for example, I'll give you an example. My parents have been with TD for, 30 years. They recently went to TD. Uh, the TD person was trying to sell them some mortgage products, etc. So, my parents are not super savvy in terms of finances. They had her email me. Then I emailed her back because we were interested in some of the things she had to offer my parents. And then I didn't hear back for 2 weeks from this individual who was initially very aggressive in terms of, my parents have a line of credit and they want this individual at TD, when my parents went to do some other things, wanted for them to bring the HELOC or line of credit over to TD, which we were interested in just to simplify the situation. And then that, very on top of things to start, and that completely disappears when we actually want to do something. And also, in my real estate business, there's been situations, as sometimes conditions have to be removed on a Friday. Bank person disappears at 5 p.m. They haven't emailed my client or talked to them that they're in a position to remove conditions. So we just don't know what's going on, and you can't reach them on the cell phone. I was just wondering why you think, whether you have any experience with that. But my personal perception is, uh, and I have nothing to gain by promoting mortgage brokers, but that the service with a competent mortgage broker on average far exceeds a mortgage rep that works at a bank. And is that based on compensation? Are they getting paid a salary so they just don't care when they leave Friday at 4:30? Or do people that are competent at a bank just branch out and become a mortgage broker?
Yeah. I mean, I think my answer to that broadly is like in any job, you're going to find people that are good at it, and then you're going to find people that aren't so good at it. And you're going to find people that care, and you're going to find people that don't care. But like driving down into the challenges of each origination channel, like the bank branch origination channel, where you're actually walking into your bank branch and dealing with branch staff, super challenging. Those staff, there's a high turnover rate in the banks. They're paid, close to minimum wage. And like your parents' experience, there's a high sales push in the banks, but very little understanding from those reps of the work that it takes to implement those things that they're trying to sell and the follow-up that that takes. So they've been trained on sales in the branch, not necessarily on follow-up and actually getting those deals um, implemented. And real estate deals are complicated. There's a lot of diligence and on the bank rep side, like the MMS channel, so where a bank pays a mobile mortgage specialist to just do one job, mortgages only, it's a good concept. But again, varying level of ability, there's always lots of turnover, and it seems like those skilled MMS providers always end up jumping over into the broker channel because they can make more money.
Okay.
Um, so, um, and even some of those busier MMS and competent, they're so busy because they're one of only a few competent providers that they don't have time to support, or they're not keeping up on communications or subject removals, which are super key for a successful purchase.
Yeah, that was a really good summary you made of trained in sales, but maybe don't understand the full execution of the follow up and what it takes, because that's kind of been my experience. Yeah, it's when you say okay, I'm interested in the product, then it's like, well, what now?
Yeah.
Which
And can I add a bit more
yeah,
on
yeah,
that?
yeah.
Like, by no means am I like um, shining a light on the broker channel and saying this is perfect, because within the broker channel itself, there's also those varying levels of abilities, um, and varying levels of dedication and care to the job. Um, and so those problems exist in the broker channel as well.
Okay.
Um, yeah, definitely.
While we're on the whole, branch mortgage side of things, I want to ask you a question. I've been banking with TD since I was 18 years old. My RSPs, TSFA, business accounts, everything is with them. Recently, I did a mortgage for my principal residence. As you know, you represented me on that. My question to you is, if you're doing a mortgage for me with TD, and let's say it's 5%, whatever that product is, as a client of TD for 20 years now that has everything with them, why can't I walk into a branch and why can't they offer me 4.8% or the equivalent of your compensation?
They,
Why is that?
well, they definitely can.
But they
So
won't.
that's they can, it's whether they can get it done,
And
right?
what do
And
you mean?
so,
What do you mean by that?
well, this is the crazy thing, is that at any point in time, a bank who has multiple origination channels like TD, and this is might wow some of your viewers, but so TD operates in the broker channel. They also have branches and they have branch staff, and they also have mobile mortgage specialists. So they have all three origination channels feeding their mortgage pipelines. And at any moment, um, the the upper management might decide to favor one of those channels over the other. I don't know what the priority is and like how they decide that. But as an example, earlier, I'd say like if in recent history, if we're going back like February, March of this year, back for about 24 months, TD heavily favored the broker channel, was giving us really competitive rates, and we were able to compete with any kind of provider on rate.
So
And all of a sudden,
just to
yeah,
clarify, like the rate you would be able to provide to your client in that situation would be equivalent to one they could get walking into a TD branch.
probably
Yeah,
better.
probably better. Okay.
Yeah,
And how
yeah.
does that make any sense if they're paying you compensation?
I mean, um, I don't know.
Yeah. But that's
Yeah,
just the way it is. That's been my experience, right? As
yeah.
well. Like, yeah.
And I think the bank, what they do is for each particular mortgage that they sell, and whether it's through the branch or through an MMS channel, they determine um, the profitability of that based on the expense of the channel. It does cost money to operate a branch. It does cost money to pay a mobile mortgage specialist, even though they're maybe earning like two-thirds of the comp that a broker would. Um, and then, of course, it costs money to pay a broker, and but it's however they calculate that. Sometimes they will bestow whichever origination channel their favor. And it's super bizarre because like a mobile mortgage specialist might be able to source you a rate in this moment right now, 20 to 30 basis points lower than what I can. And that's about the worst I've ever seen it. Um, and that's shifted completely because I'd say in as early as March of this year, we were crushing branch and mobile rates, no problem.
Okay. Yeah. Yeah. My thought overall has always been, you should be able to walk into a branch of a bank you've been banking with 20 years with and get the absolute best possible rate through that channel, but that's never been my experience whatsoever. And I've always found that like big picture of it a bit strange. Um, okay, let's segue into public perception of mortgage brokers. I don't know where mortgage brokers land. In between used car salesmen and realtors. Realtors, depending on what you look at, sometimes we're above used car sales, sometimes we're below. And sometimes I feel it's not warranted, but in the last month, I've just had some really bad experiences with fellow colleagues that sometimes I do feel it's warranted. On my side of things, low barrier to entry. There's just everything and anything available out there for the consumer. And, I do think, at least on the real estate side, some of our reputation with the public is, I'll be honest with you, I think some of it is warranted, unfortunately. And some of it stems from the low barrier to entry. And I was
Yeah,
just wondering how you view that on your end. And what is actually the perception? I mean, you must have seen some surveys regarding mortgage brokers, what the public thinks of mortgage brokers.
totally. And like I see public perception in Reddit, and I feel like Reddit's like a bit of a toilet bowl for negativity a little bit. There's lots of positive people out there as well in the world. But if you're going to go to complain about something, Reddit is the place. So take that with a grain of salt. But um, it's really hard to understand um, intentions in this world, and I think when people see a mortgage broker in a sales position and they're selling you personal debt and something that you have to work really hard to climb your way out of, that's like a challenge proposal to begin with. So you're selling a product that nobody really wants. Um, so I, first off, like that's probably a challenge point. So there's like, yes, I took this mortgage from this mortgage broker that it was X rate, and now I have this giant loan. So there's that automatic sort of like feeling maybe from customers. And then, maybe they complete and they hear that their friend got, X rate on their mortgage, but their friend and the customer, the context between those two deals might be totally different. And of course, that context is usually missed entirely in the conversation. So it's easy to feel like you've been scammed. Um, and so, yeah, I think there's so much gray area in the finance industry on the whole, and like a lack of understanding in the general public about, that rates are available for your particular deal in a moment in time, and you have to make that decision at that time. And so there's lots of context that I think is sort of melted into a misunderstanding that results in poor public perception.
Yeah, I like a lot of your points there. I deal with a context issue all the time as well, and it rears its head with, well, my friend's got a house 100 below asking, but they're always referring to the
Yeah.
original asking price. It's like, well, the house your friends bought was listed for 1 million. The seller lowered it to 950, lowered it to 919, and then your friends bought it for 900. But everyone wants to seem smart, so the friend's telling my client, "Well, we bought it 100 under asking." Well, under the original asking, right?
Yeah.
So
Yeah. And you could list something for 400 above market value and get it for 400 off the list, and that's a deal, right? But
exactly. So I can totally see what you mean with that. Um, okay, no, I really liked your explanations there. Maybe we'll transition into uh, one item that's been making the news recently in the last year was related. I don't know if you can even call it mortgage fraud. It was more, I don't know if, okay, Greg Martel, that's what we're talking
yeah,
about at this
yeah.
point, whether he's been charged with, I mean, is it a Ponzi scheme? Is it a mortgage fraud? I don't know. Maybe I'll let you start
I
that.
mean, first off, like to spec, I can only speculate with everybody else. Um, you know, I think in terms of public, going back one step to public perception, this type of thing is like super damaging to our industry on the whole because, you see the news stories out there and it starts with Victoria Mortgage Broker. And Victoria Mortgage Broker, Greg Martel scams, people out of X amount of millions of dollars.
You're right. The media is always saying Greg Martel mortgage broker. Yeah, I never thought about that, but
Yeah.
it's tied to your industry kind of just in
Um,
terms of perception. Yeah.
so ultimately, like I find that particular piece like a little bit frustrating as somebody that tries to do a good job and shed light and as much transparency into transactions and as I can. So that's challenging for me. I mean, the whole thing is like um, pretty crazy, I think. Um, you never, you know, working in the industry and looking at the returns that were given, like, and hindsight is always 2020, but like none of that is reasonable. None of those investment expectations were reasonable, I think. And I'm just so surprised by the lack of um, diligence that was applied from a lot of those investors putting huge amount of money into those bridge loans. Um, for example, like, you know, what's the title of the property? Where's the project? We all live here in Victoria. You're local. Who are we providing this bridge loan to? Can I see the conveyance of the loan? Can I see it registered on title? Like all of these things are very simple questions to ask.
Very
Um,
basic. Yeah. If you're in the know on our end, we would consider these. I mean, I have my own account to BC land titles. We're talking less than 15 seconds to verify some of these
yeah.
things easily.
Um, and from some of the things that I've heard sort of socially, like people have had accounts over $1 million in there and or life savings. And I mean, I think that's horribly sad. To that's a life-changing event for people. Um, and it really like the what's curious to me is it brings forward this issue of like how we as people and humans um, gather up social trust and prioritize that over actual diligence. And so I feel like most of these investors were probably socially connected and gained comfort from, well, Bob's doing it and he's getting great returns and he's reinvesting it and getting more great returns. And that's where the focus went instead of necessarily to like, who's actually willing to pay for this?
Exactly. And I've seen the court documents and some of the PDFs of the opportunities that were sent out, and they were literally one-page documents without any details about the project. And then you read the news articles, and, my chiropractor recommended this investment. And, the thing I find shocking is you're bringing up, lack of due diligence, this recent mortgage you helped me with. You have a great system there for uploading files, but man, was TD asking for a lot of files. And I'm
I
like, it seems to me like what I have to do to secure a mortgage on a principal residence, being a client of TD for 20 years, is excessive. And then on this end, people were, upwards of $1 million based on a one-page PDF with no details.
yeah. And further to that, like also very wild to, when we document a down payment for customers, we do full down payment tracking for 90 days. Any sort of deposits that are significant are sourced and tracked back for that time period. We do that with TD a lot. And then meanwhile, TD is getting in trouble down in the States for uh, some guy going around to different branches and depositing millions of dollars in cash. And so there's rules for the rest of us, Marco, and I think there's rules for the rule breakers. And for some reason, it's easier if you're a rule breaker.
Yeah, that's well, we have about 5 minutes left. I think I covered a lot of points. that I wanted to talk about. So, since we have a bit of time left, maybe I can ask you a few more questions. Put yourself in a position of a first time buyer buying an $800,000 townhome, completing this September, $600,000 mortgage, two stable jobs. What's your thought process on the type of product you would take right
Yeah.
now with a completion in September?
Um, so for me personally, like that lands into an insurable territory. So you're under $1 million purchase price. You're making a greater than 20% down payment. You're benefiting from the full $8,000 transfer tax exemption. You are going to pay some transfer tax on that. If you can stomach the payment of a 25-year AM, you're going to find a really good 5-year rate, somewhere around 4.84 on that right now. Um, and you could compare that to, you know, uh, potentially a conventional loan from a big bank where you may land on a 25 or even a 30-year AM, somewhere around 519 to 529 in there. And why there's a range is because the banks are competing so much right now that there's the rate sheets and then there's the actual competition where each deal is priced individually. And the banks don't want to update their rate sheets so that the other banks update their rate sheets. So it's all hidden pricing. It's
Oh, I
crazy.
see. Okay, that's
Um, but in general, like that insurable 484, I think the break even on that for your next term to match like a good 3-year fixed rate from a big bank, I think is under 4%. So there's definitely motivation there to take something like that.
so you wouldn't gamble with going with a variable and crossing your fingers that the Bank of Canada starts dropping rates.
I think in my conversations with first time buyer, it's not something that I would suggest up front.
So you do think it matters whether it's a first time buyer or a someone that's buying their fifth house and is a bit more sophisticated in terms of product.
I mean, if my first time homebuyer was an economist or worked for BCI, and had, you know, fingers on the tabs of the economy and all of that movement, then I would definitely, be able to have that additional context and be like, what would you think about this? Like, there's an opportunity to go variable and then convert into a fixed rate, um, as, the market hopefully changes over the next few months. Um, and I am seeing those requests come in more from customers, like, what do you think about a variable rate? Um, it might take another couple drops for that trend to really solidify from the Bank of Canada.
Does Out of my own curiosity, the average buyer in Victoria, in particular, first time buyer, uh, the Bank of Canada decisions, is that a question that comes up or a topic that comes up in conversation, or are they just Mike, this townhome in central Saanich, can we afford it or not based on the mortgage payment, or are they
Yeah,
looking at the Bank of Canada decisions and trends?
I I mean, it's surprising how much bandwidth the Bank of Canada has right now in the media and customer attention. And so every week that there's a Bank of Canada announcement, that's like on my end, just anecdotally, still a small fish in the Victoria pond, but my inbox fills up much quicker
Oh, that's
in
interesting.
those weeks. And the questions that come in are not as like it's like, hey, the Bank of Canada just decreased. Is that going to affect this fixed rate approval that I have that's approved and we're waiting for it to complete? And that's a really common question, and the answer to that's not super straightforward either. Um,
Wouldn't the answer just be no?
the answer is like a quick no, but let's wait and see. Um, because if a deal is approved and you have a fixed rate and you're waiting for completion, we are able to source rate float downs for customers
But
prior to funding.
Wouldn't that be more tied to the 5 year or whatever bond rate rather than that? Would that maybe happen as a result of Bank of Canada cutting interest rates, the bond market being impacted, and that trickling down to potential
Yeah,
adjustment?
exactly. Exactly that mechanism. And it's really interesting to watch. And in this last decrease, like it's like the bond market was surprised because in the weeks following, we immediately saw dips to yields. And it, you know, our understanding of the economy is that the bond market is two steps ahead of the Bank of Canada all the time.
Yeah, it's built in, right? So
But it's not, in this case, it wasn't true in this drop. It was like the Bank of Canada leads, and then the bond market goes, oh, hey, well, we got to jump on board with this. So, yeah, it was super interesting.
interesting. Okay, well, we'll bring this to a conclusion. Lastly, are you taking on new clients? What type of clients do you like to work with? In the past, I've made a couple of YouTube videos on working with me as a buyer, just explaining to people I'm not a fit for everyone. If people are very high strung, they have to see a house within an hour or write an offer in 5 minutes. I don't work well with a certain type of client. I was just wondering, do you prefer working with first time buyers, more experienced, or, in terms of credit products, refinances? Maybe tell us a bit about yourself and we'll finish it there and your business and what you can offer.
I mean, I always just say nice people. That's my requirement, and I'll do my best for. It's amazing um, how a nice, you know, I, and it's not just me, but any other broker or professional will go that extra margin for nice customers. And if you feel like you can do good for people, like it's the nice people that get that extra effort and that extra bonus. So yeah, I like that's that's sort of my favorite is nice customers. And of course, when I do an intake, I try to, you know, be totally upfront right from the beginning about where I might fall short in a particular area on pricing or where I might be able to compete with industry best rates. And then what kind of service levels come along with my approach. So it's a mix, and not you're right, not every customer will choose me because I might say, on a particular transaction, I might be 10 or 20 basis points behind market.
Yeah, and I mean, from my experience with you, I can attest there's been clients in the past that have reached out to you and you've been very honest with them, just go to your branch for whatever X, Y, Z reason. I consider you to be a really nice guy. Uh, I like working with nice people. What would you tell people that come into this from an angle of, you know, let's say Marco or Mike, they're nice guys that are not going to work hard for me. They're, like you're not a shark and you're not going to go and arm lock the bank person to get the best possible, like, because that is how some people in the industry present themselves, because from my side, I often recommend you to my clients, and sometimes I see the mortgage broker they end up with when it's not you. And I find they're sometimes sold overpromised things, and maybe that mortgage broker is not putting them into uh, doing everything ethically, in my opinion. But any comments on that? If someone's like, maybe you're too nice to get the best possible deal for the client. Do you think there's any truth to that, or?
Yeah, yeah, no, totally. And I would even go back like almost 20 years on this and say like the broker industry started out by marketing themselves as you'll get the best possible rate and we'll fight the banks for your rate. And that marketing message is still prevalent out there. I don't believe that that's the strength of the broker market anymore, is we'll get you the best rate. I believe the strength of the competent broker market is that you'll have a partner that you can rely on for this biggest purchase of your life. And I'm constantly amazed by how many people have no idea what their real estate transaction looks like. They have an idea of the size of their loan, but they don't have any other understanding of any of the other components in detail. And that's something that I think in my business is a major focus, is like this is the whole picture, and you need to, like, it's not that complicated. But once you get comfortable with understanding the whole picture, your worldview expands as a real estate buyer. Um, so yeah, I mean, um,
Yeah,
all in all, yeah,
and I do think there's a lot there, as you said, a competent mortgage broker can offer. I know there's been so many tidbits over the years I've picked up from you. I think once you gave me advice regarding one of my investment properties, there was an opportunity to pay down maybe 20% or something like that yearly prepayment, and then the penalty to break the mortgage would be smaller as the balance would be smaller. There's a lot of things that people just simply don't know about. And probably the branch person, if they don't have life experience, competency, and they might not have the motivation to, tell you things like that. So you're right. Like if you have a good resource that's a partner, in that avenue of mortgages, I think that helps a lot.
yeah. It's a confusing world, and I can see why people that are looking for mortgages get befuddled and lost and kind of spinning their tires, and it really is challenging.
Yeah, yeah, no, it's and actually one question we missed. We'll add to the end here since we got a few minutes left. What is the most frustrating, challenging thing for you as a mortgage broker? The email I sent you with some notes, I alluded to, for example, for me, there's been in my career a few times where I've showed 50 houses and those buyers, they separate, they move out of Victoria, or I've had a house listed for a year. Seller fires me, they relist with a different agent for $200,000 less. House sells. So there's some frustrating things that can happen on my end, primarily stemming from the fact that it's a performance based, commission based industry, which is identical to yours. That component is if there's no funding, there's no compensation. Maybe
Yeah.
just quickly in 1 minute, what is the most frustrating thing on your end? Because we never
Yeah.
touched on that.
I'll pick out my top one right now, which
Okay.
is like super current and current events. Like the banks are compete like we all know real estate volumes are down across Canada. So the banks are competing really hard for this business. They're also seeing the opportunity in a window where they're going to be able to get a higher rate for these loans that are going out the door. So there's a huge amount of competition in the market, and the aggressive competition, um, a lot of it's cherry picking. And as an example, if I have an approval that I've been working for clients for say 18 months or 2 years, we finally get a mortgage approved for them. They're RBC clients. RBC doesn't operate in the broker channel. Well, they're going to go into RBC to get a draft for the deposit. And that teller is going to say, um, oh, what's this draft for? And they're going to say, well, we've just removed conditions on our home and we're purchasing this home. And the teller's like, well, did you get an approval through RBC? And so after all of the intakes, the pre-approval, the pre-planning, the pre-purchase support, the perhaps deals that didn't fund due to property inspection, which happens, now you've got an approved deal in the pipeline at a competitive rate, and you're going to get RBC to come in and try to swoop that deal at the very last moment without providing any of that work. And that is happening a lot more than normally happens. And so what RBC will do is they'll say, bring us your commitment,
Oh, wow.
and we'll beat it by 1 basis point.
Wow. Like, you
And
think that's what they're actually saying?
I had one the other day. BMO beat a commitment by 2 basis points.
But they're
Um,
asking to see the commitment.
yeah,
Yeah.
yeah, they want to see the
Is,
pricing on paper.
is that even ethical for them to be doing that? Or I guess
I
it's.
mean, I don't know, but so all of the work that goes into, sourcing that approval, which is considerable, it's a considerable amount of time, can get um, sort of tossed about in a sea of uncertainty, for me as a provider and somebody who's put a lot of effort into those deals by a very small margin of interest savings. But what the customers don't know in particular, because they think, oh, I could get a better deal. Fair enough, right? You can get a mortgage for a cheaper rate. But what the customer maybe doesn't know, and happened on this one particular deal recently where BMO beat my approval by 2 basis points. So that's 0.02%. What that customer doesn't know is that BMO is providing other customers with better rates in different markets in Canada. So there's a lot more room to go there. Um, and, you know, it's a difficult conversation point as a broker. And where I say, listen, this is part of the game. I can go back and I'll do my best to compete on this, cherry picking offer. And usually I can. Um, but it's just really disappointing
Ha-
from,
Last question. Has a client in this situation that's been successfully cherry picked ever come back to you and said, "Hey, Mike, I'm sorry, I'm going here. Can I compensate you for your time?"
um, I have had offers of compensation in the past, and of course, under licensing rules, we can't accept anything. Um, and so, if for whatever reason I can't compete and I'm mutually agreeable to that, you know, I'll say ask for like a Google review or something
Okay.
like that. But
But man, that's tough because I'm assuming if you've worked with them for 6 months, 12 months, uh, that person probably already has all the files they've sent you and collected at hand. So it's a bit easier for, let's say, BMO to process that file because you've already coached your client into gathering everything they need to gather.
yeah, yeah. And, for me in those cases, like I just revert to being totally honest and just being like, listen, your deal is important to me. I've put a lot of effort into this over the last X period. It's not quite as, the process isn't quite as easy as it seems because we do a considerable amount of work on the back end to make it easy for our customers. And there's overhead, I pay a staff person and a considerable amount of like digital overhead as well, that
Yeah.
nobody considers, but
And then, other things we have to consider, you and I, on our end in these types of scenarios is the business component of it. Because you never know, that cherry picked person that goes to BMO, hypothetically, they might have a friend asking them about a mortgage broker 2 weeks later. And if you left that relationship on a sour note and, listen, said, I put 18 months into this, like, how dare you leave me for, 0.02% and you lose your cool, it can cost you in other ways. So you got to
yeah,
weigh, which is difficult to explain to people. There's always a business decision behind these scenarios that can be very frustrating, where sometimes you don't really want to show your frustration.
and I don't place blame on the customer for being like, oh, there's a cheaper option available and like paying attention to that. Like that's not um I don't place blame on the customer where I like the ideal sort of way that I'd like a customer to handle that after, doing a whole bunch of work is like, hey, this has happened. What do you think? Like, what can we do here? That's like, and I'm always willing to see what extra we can do and to make deals work. So,
Yeah,
those customers that just email and say, I've decided to do this,
yeah,
goodbye, that can be hard.
you're just asking for an opportunity, right? To
Exactly.
That makes sense. Well, Mike, I appreciate you on the show. Hopefully, Rulon's not watching, but this has been the best podcast so far. And I don't know, maybe in the future we can do this every 6 months or so and just touch base on the market and rates a bit. Today was kind of a more of a general overview of being a mortgage broker and how you operate. But yeah, I really
Yeah,
appreciate you having on the show and giving us like some like deep, honest insights as to how things actually work.
totally. And if I can chirp Rulon at all, he should come and have a look at my home gym because
Oh,
while
that's
while some of the items are
hilarious.
gathering
Yeah.
dust, um, I wouldn't give it up for the world because those days where you need to get a quick workout in for your mental health, that's just invaluable.
Yeah, no, and you have the results to prove it. You look like you're pretty fit with some, decent biceps there. So
Oh,
uh,
it's from here up. That's
that's
it.
right. You're not squatting every day.
That's
Yeah,
right.
Roland actually had 5 life tips, and I cut him off at 2. Who knows what the other 3 would have
Yeah,
been? But
totally.
we'll have to come and see your home gym there.
Well,
So
yeah, totally. The invite is out there. Let's do a squat session
squat
and
session. That's awesome.
yeah, I've got an echo bike there. We can really punish ourselves. So
Were you a swimmer or a rower? I forget back in the day.
I was a competitive rower in university.
So rowers would have strong legs on average. Is it lower
Yeah,
body or upper body rowing?
it's
I
it's
mean, it's
like
obviously the entire body, but it's
85% legs. So,
okay. Okay.
um, and then, but I was genetically disadvantaged due to my height. Most really good rowers are 6'4" plus, and
Oh, I
um,
see. You get more length. Like, I guess you got a bigger span to physics
yeah,
wise to pull or whatever. Yeah, however
yeah,
you would word it.
exactly.
Yeah.
But no, the physical activity piece. I mean, I'm in my mid 40s now. It's not optional anymore. It's a requirement for daily well-being, and
Yeah. It's the same here. So, okay, Mike, we'll
yeah,
let you go and we'll be in touch.
sounds great. Okay,
Okay, have a good day.
thanks, Marco, for having me. All
Bye.
right, take care.